It's been a historic week here on Wall Street. We started out the trading week with record highs for the major equity averages, and here we are at the end of the week after the Snap IPO. Joining me now is Timothy Anderson of TJM Investments. Tim, great to have you here today.
It's nice to be with you.
Well, we started out the trading week with anticipation about President Trump's address to Congress, and because there were no anomalies, we got the market reaction on Wednesday where we saw the Dow, NASDAQ, and S&P 500 skyrocket to new record highs. So starting out with the equity markets, how far will we go from here?
Well, really, you have to answer that question in what time period. I mean, it certainly feels like the path of least resistance is up. Now, that being said, we just had a very, very strong move on Tuesday after 10 straight days of advances for the Dow, where we went up about 4%. So some of those advances were actually very small, but the technical foundation, and we've talked about this before, underneath the market is just very solid.
And you covered a lot of ground there in terms of fundamentals, but I do want to take a step back and look at the economic data that came out earlier this week, especially those inflation figures. We did get more hawkish comments out from the Fed this week, especially dovish officials as well. But we have Janet Yellen to look forward to wrap up the week. So where do you stand in front of the Fed, and what will happen this month?
The Fed is making a very interesting shift because the comments from Vice Chair Dudley earlier in the week and from Lael Brainerd last night were very, very similar. So I get the impression they're reading from the same script. Probably Yellen will reinforce that later in the week. The Fed funds futures have gone from maybe a 20 to 25% probability of a rate hike to almost a 75 to 80% probability of a rate hike in March. And the interesting thing is the Fed is the makeup is technically a little bit more dovish on paper, but all of a sudden they're much more interested in a rate hike.
Before I let you go, I want to ask you about the IPO market. Of course, this week all focus was on Snap. Now, the company went public this week under ticker symbol SNAP here at the New York Stock Exchange. Straight out of the gate, we saw shares of the company go up by over 45%. But what do you think will happen in terms of the overall IP market going forward?
Well, it's interesting because the IPO market has certainly not been, the action in it has not been indicative of a top where a lot of people have started to be concerned about some valuations. We haven't had a real exuberant IPO market where you've got 6 or 8 or 10 IPOs a week, and some of them have questionable business plans or valuations. The valuation for Snap, of course, is very, very, very high because they're not really profitable yet. Everybody loves to make comparisons, but this is a different type of a company. You're not really like a Facebook or the other social media type companies. All these social media companies have a slightly different twist to them. So it'll be interesting to see what the forward IPO calendar looks like for the next, through the second quarter. Clearly, this is probably after Alibaba a year and a half ago and Twitter, this is probably the third big IPO to hit in the last couple of years. And we just have to see how it settles out and how they handle their first public earnings report.
Okay, Tim, well, thank you so much for joining me at the end of the week, and have a great weekend.
Sure, thank you.